Well, good afternoon. Thanks for coming. Today we're going to talk about the economic and political outlook for Latin America in 2023. We have a great panel to discuss that. So first we have Monica de Bolle. She has been a senior fellow at the Peterson Institute for International Economics since January 2017 and former director for Latin American Studies and Emerging Markets at the School of Advanced International Studies at Johns Hopkins University. She has also turned to study public health at Harvard Medical School. And she just got her advanced graduate degree in infectious diseases and human immunology here at Georgetown University. She's a graduate from Pontificia Catholic University of Rio de Janeiro, and she holds a PhD from LSE. Then we have Michael Shifter, who's an adjunct professor at the Center for Latin American Studies here at Georgetown and former president of the Inter-American Dialogue, where he served for 12 years. He's also currently a senior fellow at that organization. Michael graduated from Oberlin College and holds an MA in sociology from Harvard University, where he taught Latin American development and politics for 4 years. And we also have Shantall Tegho. He's a managing director at Goldman Sachs. She's a senior member of the investment strategy group, tactical asset allocation team. Prior to joining Goldman, Shantall spent more than a decade in various emerging market related research and investment positions. She also worked at Blackstone and at Banco de Mexico several years ago. So what we're going to do, I'm going to present a very quick summary of where do I see things shaping up in terms of economics for Latin America, and then we'll turn it to Michael to talk about the politics, Monica to discuss Brazil, having a very important turning point after the current elections, and then Shantall will talk about market implications of everything we say. So, let me have it here. Okay, so very quickly and starting from the economic outlook for the world economy, what we can see in this chart is basically the world economy is going to grow at around 2.5% this year. This is going to be one of the slowest pace of growth in the last 25 years, taking away, the year of the global financial crisis and the year of the pandemic. You can see on the chart on the right, the important slowdown, coming from the peak of post-pandemic recovery in 2021, how the world economy has been slowing down and significantly for the European Union and the United States. Emerging markets are expected to remain relatively flat in terms of growth, but basically due to the important acceleration in economic activity that it's expected to happen in China after the reopening of that country. The other important macroeconomic issue for the world economy is inflation. Basically everybody's expecting an important decrease in inflation around the world to happen in 2023 as supply side aspects start to recede. As you remember, during the last 2 years, there has been a very important discussion whether inflation was driven by aggregate demand factors. Basically aggregate demand outpacing the supply capacity of the world economy, or aggregate supply, basically global value chains not being able to recover as fast as aggregate demand after the global after the pandemic, and that affecting the prices of commodities and manufacturing, that once global value chains restart their normal operation, supply was going to move back to their normal operation level, and therefore inflation was going to recede. At the end of the day, especially for the US, the aggregate demand factors seem to have played a much larger role. For Europe, especially after the invasion of Russia in Ukraine, that generated a significant second round of effects on energy prices, electricity in Europe, etc. and therefore inflation being driven much more by supply side issues in the euro area. As you can see, I mean, central banks all around the world significantly increase interest rates, and that has affected interest rates not only at the short end of the curve, but also at the long end of the curve. You can see how the 10-year rate in different advanced economies has significantly increased during this year. Just to discuss these aggregate demand and aggregate supply issues and the relevant issues to look for during 2023 in terms of inflation, it's important to think about the US. We will have in the US a significant, and we're already having a significant decline in inflation, basically because, I mean, gasoline prices significantly decline, other commodity prices decline, and that is driving the first stage of disinflation in the US. However, the key issue for whether the Fed would need to tighten much more or much less will be the labor market. That is a sign of whether the US economy is overheated or not. We do have a very low unemployment rate. That's the first chart here, unemployment running at around 3.5, but you can say, look, unemployment was running around 3.5 before the pandemic, and we were not having a huge inflation problem. So the key issue that people have focused on is basically, if you look at the chart that it's all the way to your right, is basically vacancies. What people have said is, look, the problem is that in the US for the last few months, we have had 2 vacancies for each unemployed person. And that has been pushing wages up and generating significant pressures on unit labor costs. So to the extent that vacancies can come down without a significant effect on economic activity or an increase in unemployment, maybe we can have a smooth landing of the economy. This means inflation coming down without a significant impact on economic activity. And basically, on that will depend whether the US runs into a recession or not, and whether, I mean, we can see a labor market that goes back to where we were pre-pandemic with very low unemployment, but not so high vacancies, or vacancies continue to pressure the labor market, and therefore the Fed needs to continue tightening monetary policy, basically to engineer a recession, to increase unemployment, and that would basically force wages to decelerate, and therefore inflation on the aggregate demand side to come down. Another important news, let's say, for Latin America is that although commodity prices will be coming down during 2023, in 2023 commodity prices will be lower than in 2022, they will remain at relatively high levels. You can see in the first chart the price of fuel, energy, and gas. In the middle chart, you can see the price of grains, and the last chart, the price of metals. Almost all of them will continue to be at relatively high levels, and that is good for Latin America, because Latin America overall, it's a commodity exporting region. I mean, what are the global sources of uncertainty that I perceive? I mean, on the one hand, to the extent that the disinflation process turns to be harder to undo than what we think, maybe international financial conditions will need to strengthen even more, and that will affect capital flows to a region like Latin America that actually needs foreign capital to grow, to invest, et cetera. Second, to what extent the disinflation process will need a recession in the US, or to what extent the increase in energy prices in Europe that happened last year, and it will continue, although at a lower level, will actually generate, due to its effect on consumer and purchasing power by families in the euro area, eventually engineer a recession in any of those regions. Secondly, we might end up having another round of energy price increases in Europe due to the tensions between Russia and Ukraine. And secondly, a positive force that might affect the world economy, that is the reopening of China, and therefore the significant increase in Chinese growth. For Latin America, I mean, these world trends will imply that Latin America will be decelerating significantly during 2023. Largest economies in Latin America, like Brazil, Colombia, Chile, and Mexico, will be growing between -0.5 for the case of Chile, and for the rest of the economies around 1%, many of them close to a recession. And from the medium term, nobody's expecting Latin America to have a very aggressive growth process, and therefore the gap between Latin America and emerging Asia, emerging Europe, et cetera, will continue to open, generating important long-term challenges for Latin America in terms of living conditions for its population. Inflation following a relatively similar path like the one we saw for advanced economies, increasing significantly in 2022, and in some countries already has started to come down and will continue to come down in 2023, and that might open the door for central banks in Latin America. Interest rates for the central banks of Latin America are in the last chart, basically opening the door maybe for some of these central banks to start reducing rates, in some cases even before the Federal Reserve, given that they started tightening before the Federal Reserve did it. And in some cases, in some countries, inflation has already started to come down, especially in the case of Brazil. I would say another important challenge for Latin America was able to engineer an important fiscal response to COVID. A lot of countries, as you can see in that chart, ran significant deficits to support their population and their firms, et cetera, through COVID. But now basically they have to undo that fiscal effort, and especially for countries, and that's what we have on the right-hand side, that have wide current account deficits. That means that they need to borrow from the rest of the world. If financial conditions continue to tighten, that might become a little bit more complicated for some of these countries. The good news, and I'm pretty sure Shantall will talk about this, is that the beginning of the year has been relatively pretty good for emerging markets and Latin America from the market side. I mean, basically two important factors have happened. Expectations of a more dynamic growth process in China have improved, and that benefits Latin America from the commodity price side. And both expectations of a smooth landing in the US have also improved due to the good data on the output side, but also on the inflation side. That has driven long-term interest rate down in the US, and that has helped, I mean, some of the currencies in Latin America that are the chart on the right, basically to appreciate, and a lot of capital inflows taking place to the region. This is only a month. I mean, maybe we will see a reversal of this, but at least a little bit of positive news. On the political side and the domestic side, a lot of significant level of uncertainty. We have a new government in Brazil that Monica is going to talk about. Both facing significant challenges, both from the economic side and the political and institutional side. And in Chile, we will be having another year of constitutional reform process that might end up with a plebiscite, that will end up with a plebiscite at the end of the year. We have elections in 2023 in Argentina, the country with the second highest inflation in Latin America, touching 100%, only behind Venezuela, and the fourth highest inflation in the world, and also a country that has closed its capital account, that is completely shut down from international capital markets. Elections in Guatemala and Paraguay, and looking forward to 2024 national elections in Mexico, an important local election in 2023 of the largest state in Mexico, that is the state of Mexico. Two important questions is to what extent nearshoring will help Latin America. Nearshoring, basically this process by which global value chains will shift important parts of its production processes from Asia to other parts of the world, due to the uncertainty of transport costs to shocks like pandemics, but also to climate change, hurricanes, et cetera, and also due to geopolitical issues. Not to what extent US and European firms might not want to have some part of the production process in China or Asia. Something that happened last week and has some people excited and can give us, I mean, some time to talk about that, is to what extent there might be a common currency in South America in the next couple of decades. I think there's a strong work to be done in Latin America to generate important integration in the region, and maybe a common currency is something that should or might happen after all that integration actually takes place. But maybe, I mean, it's a little bit premature to start talking about these issues before, I mean, especially Argentina stabilizes its economy and then it integrates a little bit better with the rest of South America before moving towards a common currency. So lots of things to talk about. I'll turn it to Michael, and then we will continue with Monica and Shantall. Thanks, and thank you for coming.
Well, good afternoon, everybody, and it's really a pleasure to be here, and I want to thank Alejandro, Denise, for the invitation, and thank you all for being here, and thanks. It's great to be with Monica again and to meet Shantall. So look forward to listening to them and to hearing any questions or comments. We all know that in 2022, last year, there was a lot of turbulence in Latin America. And given the uncertain and challenging outlook that Alejandro just described globally, together with the region's very serious economic conditions, the social distress, political divisions, and institutional weaknesses, it's unlikely that that turbulence is going to abate in 2023. If you just ask yourself the question, three issues: corruption, crime, and inequality, where do you expect those to be reduced in 2023? It's not easy to come up with a lot of encouraging responses. And those are three critical issues that certainly contribute to political volatility. Start with the country that's in the news today, the dramatic and troubling situation in Peru, which has experienced the most violent political violence it has in decades, with 58 killed and protests rocking the country. A tremendous distrust of the entire political class, and overwhelming disapproval for President Boluarte, and even greater opposition to the Congress. Last night, as I was thinking about what to say today, I was hoping for some good news, so I didn't depress all of you too much. And I did. I got some good news on Peru with President Boluarte's address last night, calling for elections in October of this year. According to the poll from the Institute of Peruvian Studies, 73% of Peruvians want elections this year and not next year. And so, she listened to public opinion, which is important in a democratic system. And she announced that. We'll see what happens, how the Congress responds. But I think this is at least a possibility of trying to calm the waters and stabilize the country's politics. It's unclear if new elections will yield a better political class, but clearly this is the demand for change, and it's the main demand in change in the streets. There's also a demand for a new Asamblea Constituyente, and Boluarte said last night in her speech that this would be something that the new Congress should take up, about constitutional reforms, not necessarily the Asamblea, but at least trying to respond a little bit to demands. On the Peru case, I think it's good that Pedro Castillo's very strange attempted self-coup on December 7th, which failed, led to his constitutional removal as president, who tried to take over Congress and control the judiciary. That is clearly a rupture of the constitutional order, and the Congress responded. But it's at the same time, it's not too good, in my opinion, that a sector of Peru's political class denied the results of a free and fair election in 2021 and never recognized him as legitimate president of Peru. And election denial with no evidence is a recipe for political instability, whether it's in Peru, Brazil, or the United States. And Peru highlights another regional tendency that has been building and quite striking today, that I want to spend a minute or two talking about. The lack of a political opposition or leader in so many countries in the region. And as a result, the resort to street protests, that the street is becoming increasingly important as an arena for political contestation rather than through normal institutional channels. Starting with Mexico, López Obrador seems to defy political gravity, has 61% going into his fifth year. As Alejandro mentioned, the elections 2024. And yet, most people believe that somebody from his party, Morena, either the foreign minister perhaps, or the mayor of Mexico City, will be the next president of Mexico. And if you ask yourself, who's the opposition figure to López Obrador, where there's been a lot of vulnerabilities, whether you talk about the economy or violence or corruption or other issues, it's hard to come up with a lot of names. At the same time, you saw massive protests in the streets in Mexico when AMLO attempted to control the electoral authority that produced. So people go to the streets, and yet if you ask who's the opposition leader, it's hard to come up with a name. In Venezuela, and Alejandro, you didn't mention in 2024, there's also talk of an election in Venezuela, which we shouldn't forget, but doesn't look very good right now. Juan Guaido is faded. Who's the opposition leader to Nicolas Maduro, who's been in power for 10 years? Nobody. At the same time, if you look at what's happening in Venezuela today, there are a lot of protests over economic issues and concerns about employment and other issues. Who's the leader of that of those protests? So the point is that you have the streets becoming important, and yet leaders and opposition figures. Look at Nayib Bukele in El Salvador. Who is the opposite? Who is the leader of the opposition? Nayib Bukele. Even Gustavo Petro, who took office in August of last year, at 50%, want a big fiscal reform. Now, I think it's become more difficult. There are high expectations and whether he can deliver or not. But who is is there anybody who is the opposition figure to Gustavo Petro? Certainly Álvaro Uribe is kind of faded from the scene. I know that Monica's going to talk about Brazil, but even in Brazil, sure, Bolsonaro, there's a very significant right-wing movement that almost won the election in October. And sure, Jair Bolsonaro is leader of that. My sense is he's going to kind of get a low profile these days. And yet you have half the country that's opposed to Lula, and especially the Workers' Party. Will new leaders emerge to be in the opposition to Lula? I think that's a big question. So this, I think, is a pattern. A couple of other situations I just want to call attention to get the full regional landscape. One is Bolivia, where there also there's a lot of protests going on and blockades of major highways. The historic division between, it's the country where there's probably the sharpest division historically between the capital city of La Paz, which is indigenous, and where the MAS party has most of its support, to the eastern province of Santa Cruz, which is agricultural producing area. And now you have a leader from that region that's been detained, Luis Camacho, and is accused of having engineered a coup against Evo Morales. And Santa Cruz has kind of exploded, and there are blockades of streets, of highways, and products can't go to the major capital, and there are intense conflicts. What's going to happen there in 2023? A country that's not as much on the radar, but something maybe to watch out for, is Ecuador. There were significant street protests next year. The indigenous groups and organization, CONAI, is very well organized. President Lasso has 15% support in the polls, and he has very little support in Congress. That's kind of blocked his agenda. So what is going to happen there? And I think most disturbingly, violence there has skyrocketed more than any other country in Latin America, over 300% from 2019 to 2022, with 83% of those homicides related to drug trafficking. And you've seen, I'm sure, many news reports of prison riots and the likes, with many, many deaths. So the elements are there for some trouble in 2023. Not predicting it, I'm just saying that if you analyze the situation, you wouldn't be shocked. So I think the big question is whether these protests are going to eventually sort of find some expression and channel through more institutional means than they are today. But but that's the situation. Let me go very briefly. I don't want to take too much time, but just going to the elections, Alejandro, I think the most closely watched election this year will be in Argentina, without doubt. And, Argentina was very important for the shift to the right with Mauricio Macri in 2015, and then the shift to the left with Alberto Fernandez in 2019. And the question is, will it swing back? Or will it continue to be led by the Paradis coalition? Today, we have a situation where, as far as I can tell, there is enormous disarray within both big coalitions. Juntos para el Cambio, Frente de Todos of the government, and Juntos para el Cambio of the opposition. The elections are in October. There's very little sense of who's going to be the candidate of either coalition. There's very little sense of what to do with former presidents of both coalitions. Will they run? What will the dynamic be? So it's usually at this time there's somewhat greater clarity, and primaries will happen in August, and then we'll see. And then finish with a wild card in that election is Javier Milei, who is somewhat of a libertarian, anti-politics, which we've seen before in many countries, but we haven't seen it in Argentina because the view was always that Peronism was so able to sort of encompass and co-opt and sort of every single political kind of current. But Peronism, it doesn't have the strength it used to have, and Milei is resonating, and his message is measured. He's now 15-20% in the polls. So could he possibly win? I mean, even to ask that question is quite revealing about Argentina. And if he doesn't win, could he be a power broker in the second round of the elections? So I won't go on any longer, just to say that, hold on tight this year. I will try to end on a more optimistic note, that I think that democracy is under stress in Latin America, without doubt, but it also is resilient, reflected in the Brazilian elections, I think, which were fraught, and even in the situation in Peru, where things seemed to be that it would completely break down and collapse. It didn't, and things happened constitutionally, and the violence is certainly very regrettable. But I think there are things, I think there are positive aspects that should be looked at. And let's not forget, Latin America is still overwhelmingly democratic, which means that people who don't like governments can vote them out. And that's not something that we could say in many other parts of the world. So it's important to keep that perspective. Thanks a lot.
So thank you, Alejandro, for inviting me once again to speak. We had an event about 10 days ago on Brazil, but I'm not going to repeat the things I said then, because Brazil is Brazil, and in 10 days things happen, and it's even difficult to sort of find, what am I going to start with and where am I going to end? So I can't promise that I'm going to end on an optimistic note. I can't promise that I'm going to end on a pessimistic note either, because the situation is just simply absolutely fluid. The new government has been in place for 30 days, 30. It feels like 3 years at this point from where I'm standing. And I can tell you, I'm an economist by training, but my chief interlocutors in Brazil at the moment are anthropologists, because there are at least two issues that one needs to understand, and they both touch upon what Michael was saying before. One of them is, what is this street movement, which in the end is actually a digital movement that manifests into the real world, spilling over into the streets. So understanding the, digital politics, as it were, understanding the extremism, and in Brazil, extremism is a thing, believe me, a big thing. Understanding how people get radicalized on digital media, whether they be message apps or social media more generally. This is a critical issue to sort of figure out where exactly the country is going. So anthropology right now is very big in terms of trying to understand where the country's moving. And then there's the issue of extremism, which, is not exactly new, I guess, in Brazil, but the form that it has taken recently, and when I say recently, I mean like the last 8-10 years or so, is very different from what we used to call extremism in the past. And this is also something that has, a lot of people trying to think through what the implications are and what it means. So how do these things touch upon two issues that Michael mentioned? So Michael talked about the lack of an opposition in these street movements. The lack of an opposition in Brazil has been real for a very long time, in the sense that the only two opposing forces that we've seen now for 2 elections in a row, if not a little more, are Bolsonaro and Lula. Those are the 2 chief opposing forces. We saw them in 2018. We saw them in 2022. Bolsonaro is probably fading into the background. I agree with what Michael has said. However, what the movement that made Bolsonarismo grow, and Bolsonarismo is now going to be reconfigured into something else, so it's not going to be called Bolsonarismo anymore, but it is going to be far right and extremist in the same sense that Bolsonarismo is, because that movement has now become more consolidated. It has clear financiers. It has clear leaders, although they're in the plural. So there's not one standing figure that actually represents the opposition. Nonetheless, it's really important to understand that the opposing force to the Lula government is not a moderate right wing. It is an extremist right wing. And that is very unlikely to change in the next 4 years, because that extremist right wing has dominated the political scenario so completely and has found expression in the Brazilian Congress. The Brazilian Congress is going to be, the new Brazilian Congress is going to be inaugurated 2 days from today. So on Wednesday, on February 1st, that Congress now has a number of formal ministers from the Bolsonaro administration, particularly in the Senate, which is a really important house everywhere, but in Brazil in particular, the Senate has always served as a sort of a balance within the legislative branch. That balance is clearly now tilted. And there's a really interesting thing going on in the political sphere in Brazil. We're going to have elections for the 2 presidents of the 2 houses, so very soon, both in February, so for the lower house and for the Senate. And the really interesting thing that's happening in the legislative, and we don't know how that's going to play out, is that it seems like there's a ground shift. So whereas before you had all of these, the political system is very fragmented, but you used to have all of these smaller political parties that formed a so-called center, not in any ideological sense, because these parties have no ideology whatsoever. They're in the business of horse trading with the government and just getting, things for themselves, for each of the politicians. But this held together, and this was kind of the glue which governments used to negotiate with. This is called the Centrão for anybody who follows, closely Brazil. It's not clear what role the Centrão is going to play now with a Congress that actually has a number of people that are straight out of the Bolsonaro administration and who are not necessarily aligned with the Centrão. So that it's going to be interesting to see whether or not there's going to be a ground shift in that kind of makeup in the legislative in Brazil, with implications for how the government is going to manage things. Because just to bring things back to Lula governed Brazil, 20 years ago at a time when coalitional politics was the thing, right? So you have this very fragmented political system. You need to build a coalition. You get together with the Centrão and some of the other parties. You build your coalition. It's always kind of haphazard. You have to do certain things. Corruption comes into play. But, by and large, the system sort of moved along, or bumped along, as it were, throughout that time. And those were the 8 years that Lula was in government. That's how he governed. He governed under that system. We no longer have exactly that system anymore. Things have changed. And in particular, the way by which you build coalitions within Congress has changed with these new players from the far right coming in. The far right is not interested in negotiating necessarily with the Centrão. The far right is not even quite interested in negotiating with anybody because their main agenda is to destroy. This is what they showed on the 8th of January. The 8th of January, by the way, was no fluke. So it wasn't something that happened out of the blue. It was a highly organized, orchestrated act of violence on the three branches of Brazilian democracy. So on the judiciary, on the legislative, and on the executive. That did not happen by chance. It did have the aid of security forces, of broadly speaking security forces, but that includes police and that includes the armed forces. Many of you perhaps know that there were camps outside of army barracks throughout the country for months, ever since Lula won in the second round in late October, and that in Brasilia specifically, at one point, there were over 40,000 people camped out in Brasilia to not only questioning the results of the election, but actually organizing to form movements that would not allow Lula to be inaugurated on January 1st. So the thing is really serious. And the involvement of the armed forces has been a point or something to consider, think about, and talk to anthropologists about all along as well, because the military have been heavily involved. We had that, sort of honeymoon period kind of in the 1990s where we thought, okay, the military are just going to go back into the background and they're not going to have any political ambitions in Brazil anymore. Well, that's clearly not true. And for people who have been studying the military in Brazil for quite some time, it's very clear how they've been making their way to politics and how Bolsonaro himself is a result of the fact that the military in Brazil have political aspirations. Bolsonaro was not a chance event. Bolsonaro was the figure that the military found to stand behind. And they are going to find somebody else for 2026. So who that somebody else is going to be isn't clear, but there are quite a few players within this sort of far right spectrum in Brazil that are clear possibilities, including the current governor of São Paulo and the current governor of Minas Gerais. So it is a country very much in flux. It is a country that's oscillating between, as Latin America usually does, the left and the right, except that now it's going more extreme. And the more extreme you go, the worse it is for the country in general, the worse it is for society in general, because of course this stresses things out to a very large extent. And the worse it is, of course, for the economy, because there's no follow through, right? So you may have a government now, the Lula administration, for example, with a number of, at least some of them really good initiatives, like a tax reform, which has been proposed, like rebuilding the social programs that were destroyed by Bolsonaro, like the policies for the environment, like, protecting the indigenous peoples of Brazil. You probably have seen in the news the stories about the Yanomami, the indigenous people up in the Amazon who were completely without any sort of health services for 4 years. And the absolutely tragic disaster, human disaster that has happened to them as a reflection of the government simply stepping out and not protecting them. But not only that, allowing illegal activities, illegal mining activities in the areas where these indigenous people live. So there's a lot of rebuilding and a lot of reconstruction to be done. Surely some of it will be done, but it's 4 years. It's 4 years to rebuild an entire country, to give people the confidence that they once had. So that confidence that, social mobility will be back, that inequality is going to be reduced, that yes, politicians are going to respond to the needs of the people. These were the basis for Lula's election. So those who voted for Lula voted on, sort of the promise that these things would actually occur. 4 years is too short a time to see the results of this, especially if the world isn't helping you. Lula was able to do, the massive social inclusion that he did in the first 4 years that he governed, because also of the unimaginably good external conditions that he faced at the time. He does not face those conditions, as Alejandro was presenting to us in the beginning. He does not face those conditions now. So what is it in a highly fractured, and it's polarization is not even a word that's helpful to describe Brazil anymore, because you basically do not have a line connecting the two spectrums. It's almost like, you have extremists on one end, you have the rest of the population on the other, and there is no line that connects the two. I mean, geometrically, we know mathematically that 2 points should be connected by a line. That line has been erased. There's no line. So the people who are on this extreme end of the political spectrum, the sorts of things that they say, the kinds of things that they espouse, the ideas that they have are so far removed from reality that there is no coming back. There is no line to bring them back. This is the state that the country's in, and I'm not exaggerating. You pick up anything on Brazilian news these days, and that's what you see. There was a very interesting documentary that was just made about extremism in Brazil. It's an 8-part documentary docu-series. It's in Portuguese for those of you who speak Portuguese. But it really gives you a lot of insights into this thing, which is, this huge movement that we now call the Brazilian far right. So that is the country in a nutshell. That's the situation that it's in. Economically, what Lula is inheriting from Bolsonaro is not great. So yes, there's a primary surplus that Lula is inheriting, but that primary surplus was largely generated on the back of, dividends from state companies that were anticipated when they should not have been anticipated, and other such maneuvers that helped the government, that helped the Bolsonaro administration deliver this small primary surplus that they did. Broadly speaking, fiscal accounts in Brazil are not in great shape. The debt to GDP ratio is relatively high, even if you're looking only at, at gross debt minus international reserves. So at some measure of net debt as opposed to gross debt, it's still very high as a percentage of GDP. So there's very little room to do much in terms of, building programs that would actually generate the kinds of results that people are expecting. So the chances of disappointment are really, really high. Tax reform requires a lot of political coordination. And in particular, it requires coordination, not just within the legislative branch, but it requires coordination with governments and with municipalities, because of course, it encompasses the entire country. And you have governors in certain parts of the country which are entirely anti-PT and anti-Lula, and probably are not going to cooperate very much with this effort. And, the effort in itself is already complicated enough as it is. So chances are that, we will have 4 years of a muddle through that we cannot afford. And I can't say that enough, because we really cannot afford another muddle through, given the kind of political instability that is in play at the moment. And given that this process of, the pendulum swinging ever more to the right and in a fairly extreme way is just at the beginning for Brazil. This is not like, oh, now Bolsonaro's gone, it's the end, we're done. We're not. Bolsonaro was the, let's say, opening act. What comes after is the real deal. And this is what the next 4 years are going to determine. So I will end there on a very something, I don't know, probably pessimistic note, and then come back for questions if you have. Thank you.
So last year, we ended with the news that China was ready to re-enter the rest of the world, and they walked away from zero COVID policy. So obviously that is very positive news for global growth, and especially for Latin America and those countries that rely on Chinese growth. However, most of that positive surprise has been already embedded into asset prices. And so the other part of the uncertainty that Alejandro laid out was what's going to happen with US growth. And I thought it would be great for me and for you all that we would just take a deep dive. And the reason why I think it's important to take a deep dive into US growth is because we think that we are still in a US preeminent world. And so to that extent, US is going to be driving these external dynamics. Now, we are coming out for COVID. And for the first time in many, many years, we all are aware that supply chains are important. And the way I linked this into the US preeminence theme is we all of a sudden think and realize that we need to focus on investing in countries that have national security in key supply chains, such as energy, agriculture, defense, potentially semiconductors, as Alejandro talks about nearshoring. And so if you think about this, the one country that can check all the marks for these key supply chains and on top has very deep liquid capital markets is the United States. And also when we think about investing in emerging countries, and especially Latin America, Michael mentioned, all the turmoil that is ahead of us, we want to think of countries that have lower tails, especially on the left hand of the spectrum. And so for this reason, obviously, Latin America stands out for a region that has constantly disappointed markets. We did come out of the of the COVID crisis with growth that never was able to go back to the levels we saw pre-2020. We had very violent political forces in the last few years, and that's not going to change in the future. So let's just focus on the US for a second and then try to come up with an answer on whether the US will give us any type of good positive news for Latin America. So the United States, 2023, our base case scenario is that we are not going to see a recession this year. We are forecasting growth to end the year with a positive note of 1.7%. So last year we grew 2%, this year 1.7%. Now, the reason why I'm mentioning this is because when we are investing in countries, we want to think about the differential between the country you're putting your money in and the US. And so from that angle, the growth differential, if we go back to that chart that Alejandro had, you can see that some countries in Latin America are not going to be able to catch up with that forecast that we are delivering for the US. So for example, Chile is forecasted to lose 0.5% of activity this year. And so you see the growth differential would be positive in favor of the US. And so in general, we just find that this growth differential, it really is tilting in favor of the US for many of these countries. Now, when we want to think about US growth, we want to think about what's happening at the corporate sector and the household sector. And you'll see how when you take a deep dive into these Latin American countries, you don't have the same strength, same type of resilience. So US corporate sector is very strong. Now, we had a very aggressive tightening of financial conditions last year. As I mentioned, rates were increased from 0 to around, where they're going to end around 5 to 5.25%, fastest tightening in the last 30 years. And so the question is, can the US grow with that level of interest rates? The last 12 years, we've seen corporates in the US getting used to very low rates, non-profitable companies just relying on this low rate environment. And so what we find is that when we look at the US corporate sector, in average, these companies got access to leverage at fixed rates with average maturities of 5 to 7 years. So it means that the current level of interest rates might not be enough to push the economy into a recession. When you look at other countries in emerging economies, that's likely not the case. Sometimes they have to borrow at floating rates because they don't have the same credit quality. So from that angle, the US screens better. Now, when we look at US households, for example, US households have gone through a very aggressive deleveraging cycle. Debt to GDP in the household sector reached 100% in 2008, and we are now seeing levels of around 70%. So we've seen a reduction in leverage that's very, very good for the US economy. And also, we've seen that most of the debt outstanding in US households is mortgages. And so the current average mortgage rates in US household is like 2.5%, 2.8%. So significantly below that level that I just shared with you, and where the Fed is going to end at around 5%. And so this means that from a corporate sector and a household sector, we're really not seeing a lot of indebtedness, not a lot of leverage. If I take a step back to 2008, when you look at a heat map of the US economy in 2008, which was obviously very negative, the outcome of 2008 to EM, you saw a lot of leverage in the US economy. And so if the US economy is the number one driving force of external conditions, and then all of a sudden you see a lot of leverage building in, households very indebted, corporates very indebted, obviously the resulting 10 years, following 10 years will be a cleansing of balance sheets. So we're not there this time around. And that's why we're quite confident on this base case scenario of a soft landing. Now, obviously, there are risks for the economy. We could find ourselves in a recession towards the end of the year. But again, if I borrow from what Alejandro shared with you, it'll be a function of what's happening on the unemployment, on the labor market. And so in the US right now, as you all know, we are enjoying a very tight labor market, very healthy conditions. The unemployment rate is stuck at the historical lows, 3.5%. We hadn't been there in a long time. Again, going back to the global financial crisis in 2008, there were people that lost their jobs post-Lehman, and it took them 10 to 12 years to find a job again. And right now there's 2 jobs for every person looking for one. So completely different dynamics. Now, obviously this will change. Our forecast for this year is that the unemployment rate is going to increase from 3.5%, where we ended last year, to 4.1%. So not that much of an increase. And the reason why I'm mentioning this is because this will be the most important variable to follow from a market's perspective this year, what's happening to the unemployment rate. Now, just to share a statistic, in steady state, the US economy generates around 100,000 jobs a month. And we're seeing right now double that amount. We're seeing job creation of around 200,000 jobs a month. So we're still seeing more growth in jobs than we're seeing a decline in jobs. So how are we going to get to an unemployment rate of 4.1%? So as the economy slows down, which is the natural path as we enter the last part of the business cycle, we do think that some companies are going to try to, get ahead of rising costs because of wages, slower economy, and maybe lay off some people, but we'll end the year with a 4.1%. Now, if we're wrong, if the unemployment rate were to find itself around 5%, then obviously the recession would be a little bit deeper. Now, let me share with you the numbers, because I know when we talk about recession, it creates a lot of anxiety. The median recession in the US is, since World War II, has been a decline in real growth of around 1 to 2%. 1 to 2% is the median recession, and the US economy has been able to recover quite quickly. This time around, we are thinking that we could be seeing, if we find ourselves in a recession, not the base case, it could be the most shallow and short-lived recession since World War II. Why? Because we're linking it back to a really balanced economy. So again, I'm just trying to lay the ground for external conditions for EM and Latin America this year. So in a sense, things are looking a little bit better. China reopened to the world. We're seeing a very well-balanced economy in the US. Conditions obviously have tightened, but if we find ourselves in a recession, we're saying it's going to be a short-lived one, and we should be able to recover and enter a recovery mode and think about the next business cycle from there. So should we invest in Latin America? The issue with emerging markets and Latin America is when we look at valuations, they are cheap. So you can make a case, yeah, it makes sense for us to invest in Brazil because, it's cheap from every valuation metric. But just as Michael and Monica mentioned, the tails are quite wide. And so obviously the distribution of outcomes is going to be unpredictable. And as foreign investors, we find that it's very important, if you want to take a structural view into a particular country, you want to know that the policies that are going to be implemented are going to be credible, transparent, and predictable. And the issue with Latin America is, unfortunately, it's been none of the above. And so for that reason, when we think about how we want to construct portfolios for our clients, we still think that the US is the best option in the market. And returns this year look really attractive. So I'm going to share with you the returns we're forecasting, because at the end of the day, I'm here to talk about markets and, where could we potentially make money? We are forecasting a 30% return in the S&P this year, assuming the prices at where we ended in December 31, 2022. So for the year as a whole, 13%. We're not expecting the same for EM. We are expecting EM equities to deliver around 9%. But when we look at EM debt, we're expecting around 5%. This 5% has already been delivered in the first 4 months of the year. Now, Alejandro mentioned we started the year on a good note. Why? Because China reopened. And so far, it seems that for the US, we're looking at a soft landing. So what are the risks? The risks are that inflation doesn't come down as fast as possible. Alejandro asked me to talk about inflation trends in Latin America, risks to the inflation trends. And I just want to say that not only for Latin America, but also for the US, the issue is, what if central banks start to ease preeminently? So what would this mean? That the moment the data starts to slow down, central banks start to freak out, and maybe without inflation expectations being completely anchored, they start to ease monetary policy. So that will be also a very important factor in uncertainty to keep a strong eye on throughout the year. Now, for the US, we are thinking that the Fed finishes the cycle in March and then stays on hold for most of 2023. So that means that the US economy is going to have to deal with really high rates. Why is this a risk for Latin America? Because although Latin America, as Alejandro mentioned, hiked rates faster and sooner than the Fed did, the US right now looks like a high yielder. So if you buy 2-year treasuries in the US, you're looking at a guaranteed positive return of 4%. And that's pretty high. And so in that environment, the US dollar tends to outperform emerging market currencies. So for now, we've had a very strong end of the year, start of the year, but going forward, everything does seem to be signaling that EM is not out of the woods, Latin America is not out of the woods, especially if political turmoil is going to be here to stay. Now, for US fixed income, we're forecasting positive returns of 8%. So again, higher than the 5% we're forecasting for EM local debt or EM rates. And so a good part of this has already been delivered. 4% is already on the table just from the way the markets have traded in the first 4 weeks of the month. But the rest of the 4% is yet to be accrued throughout the rest of the year. So you can see how the forecasts for US assets are just so that much more attractive than Latin America. So Latin America really needs to get their story straight. They need to implement policies and build models, economic models that are equipped for a post-pandemic world and that can deal with a US preeminent world. And we're just not seeing that at the moment. So for now, the message is base case scenario, no recession in the US. That's positive for US assets, 1.7% positive growth, and US preeminent world that suggests one should stay overweight the S&P over other emerging markets. So let me stop here, and then I know we're going to open it up to a very interesting discussion. Thank you.
Thank you very much. I mean, to everybody, let's run over 10 minutes. We can take maybe 4 questions. No, we take all of them at once, and then we give each of the speakers 2 minutes to wrap up. So.
Hi, I'm Andrew. I'm a graduate student in the McCourt School, especially for Shantall and Alejandro, but obviously all of our esteemed experts can weigh in. This trendy topic of reshoring, nearshoring, onshoring, friendshoring, ally shoring, whatever you want to call it. It's been trendy, as I said, for a while now, especially in the face of uncertainty from China. But is it actually happening? I mean, is it actually happening? Do the numbers make sense, like economically? And especially after listening to all of our esteemed experts talk about the terrible political uncertainty, corruption, crime, underperforming markets, et cetera, of Latin America, why is it a good business case to reshore in Latin America at all?
The question is for Michael and Monica. Basically, you were saying that the institutional weaknesses in the region are paramount. And the fact that we have people in the streets makes it very complicated to govern under these circumstances. To make a long story short, the question is, do you see any good diagnosis and maybe some simple proposals that could turn the region in the right direction? And one of the reasons I'm saying this is because you see the charade that we saw with CELAC. And it is unclear to me that political systems have very clear how to deal with corruption, crime, and inequality. Maybe there may be some progress there. But on the institutional strengthening, is there any hope that we could find any move in the right direction?
Thank you. I'm Ari Katsovic, a visiting professor for this year. 4 pointed questions to each of you. Alejandro, can you tell us a little more about this intriguing concept? I don't know, nearshoring, what does that mean? Michael, you mentioned democracies in stress were resilient. That sounds a bit oxymoron. Maybe you can add a sentence. Monica, Lula fired the army commander, right? Not the chief of staff. What's the role of the army in your nightmare scenario? And Shantall, you start by referring to US role and Chinese role, and Latin America might be in the middle, but you didn't say anything about that. Maybe you can add a sentence. Thank you.
Hello. So there was a lot of discussion about the emerging trends politically and economically in Latin America. What I wanted to know more about, and maybe you can shed some light on this, is what are some emerging trends in the Caribbean like in the Greater Antilles, Lesser Antilles? I'd like to know a little bit more about that.
For time. So why don't we start with Monica? I mean, you address your questions. We'll all try to do it quickly. We follow Michael, Shantall.
Start with, I'm going to start with the last question, and then I'll come to your question. The last question on the military and on the nightmare scenario. So what happened was the chief commander of the armed forces in Brazil was a Bolsonaro supporter. And there were very clear indications that he was a direct participant in organizing the acts that led to January 8th. So his position was completely unsustainable. And eventually, what happened was going to happen. It's good that it happened fast. And so Lula fired him and substituted him by another army commander, another general who was serving in the southeastern part of the country, and who just the day before, and obviously not by chance, had made some very good remarks about democracy and the resilience of democracy and how important it was to respect democratic institutions, and on and on and on. So he was the one that was appointed as the chief commander of the armed forces. Now here's what's happening, and here's where it gets interesting with the military in Brazil. What has happened now is that when you take the high command of the military in Brazil, they're now all pacified, as it were. They've come to an understanding with Lula. They're happy. Lula's happy at the moment. All is good. The problem is not these guys. The problem is everybody else underneath. So the structure of the military, which has been heavily radicalized in the last few years, in which, as I said, has become more and more politicized, what role did they play? And how can these chief commanders of the armed forces, at the end of the day, these generals, how are they going to be able to hold back these forces, which are very anti-PT and anti-Lula? So the nightmare scenario is really one where, let's call them underlings. The military hate that. Let's call them underlings. Revolt, and basically this pacified situation, which is really not pacified, but it's Brazil, so we pretend that it's pacified, doesn't hold, and in the end you just end up with more turmoil, and the risk to democracy is there. It hasn't gone away. So this is, I think, a message that needs to be really clear. It's there. So thank you for that question, because it's a really important one and a really important point. And that speaks directly to your question on institutions, because the institutions in Brazil are obviously, they held together. It's true. What Michael was saying is very true. And it's very important that they held together when they did, because this was not the first time they were stressed. It was, in fact, probably the third time that they were stressed to a level that could have really shaken things up. The time before that was on the 7th of September of 2021, when things got really bad in Brazil with a lot of street protests and things like that. But the danger remains, because this portion of the population that has radicalized, it isn't going back to anything else. They have formed their worldview. They have a completely different worldview from what the rest of the country voted for, and there is no way to bring them back. If you listen to what they say, you see it very clearly. So the country is really completely fractured, and that is also affecting institutions, because a lot of people with that exact mindset permeate institutions throughout the country. We're talking about everything: the legislative, judiciary, the security forces, members of state governments and municipal governments, and everything else. So it is the most delicate. I don't think I'm exaggerating when I say this, and knowing a lot of Brazilian history, it is the most delicate point that we've ever been in since 1964, at least. It is really serious. Thank you.
Michael. Thanks. I'm not an expert on on nearshoring. I'll yield to my other colleagues, but as I would just say, I'm one of the skeptics. Certainly, some of it's happening. I mean, there have been reports that it's happening in Mexico, for example. There was a New York Times article which documented a lot of it. A lot of it is anecdotal, but there seems to be some of it happening. But Alejandro's initial presentation said, I think, nearshoring game changer. And that I would say no, at least from what I've seen, it's not a game changer. I think people, given this very complicated outlook for the region, people looking for, areas of opportunity and some hope. And so I think they look at nearshoring, but I think it comes down to the factors that we talk about. I mean, it's always Latin America will boom if these 10 things happen, and nearshoring will be a significant change if there's rule of law, if there's increase in productivity, if there's better human capital, if there's, all of these things, which are not really moving in the right direction in most countries. So I think that's a problem. I think if it is an opportunity, it's mostly an opportunity for Mexico, Central America. I don't see it in South America happening at all. And the final thing I'll say is that, the US government is not exactly exuberant about nearshoring because politically, they want people to invest in the United States, not Latin America. They want to create jobs in the United States. So, I don't think you're going to find a lot of enthusiasm for US policies that encourage private US companies to do nearshoring in Latin America. At least if they are, they're not going to do it publicly. They'll do it quietly because politically it's, that's the kind of, that's the politics that we live in. So that's just my 2 cents, but others may disagree. I do think, institutionally, I think the question is what can be done. First of all, I'd say Chile was kind of the example that we were hoping for with the Constituente. It was rejected. Now they're coming back for another, try. Maybe that will be successful, and that will give us, some hope in terms of institutional kind of change. Also, let's not forget that there was, Lava Jato in Brazil was important. There was anti-corruption in Guatemala that was important. There's a president in jail because of that. And look at Peru. Getting back to the Peru case, what's striking about Peru is that every single elected president since Fujimori has had, corruption charges and have, but the judicial system there have been good prosecutors and there have been good judges, and a lot of those people are in jail or have served. There's been a cost to corruption. So that means the judiciary is kind of, there's some professionalism there. So there's some of that, that's happening. I think the corruption issue now, I mean, it goes in kind of waves. I think we're at a low point, but it could, in terms of responses to corruption. I think that's about it. I didn't understand your question, why it was an oxymoron. What? Yeah, well, it's under stress, but it's, it survives, and it's, people still, with the exception of 3 countries, people still go to the polls and they elect their leaders. That doesn't mean it's not under stress, and it's, but it continues. So, it's been able to deal with that.
All right, so nearshoring, and I like your question because you're like asking, how do we measure it? As Michael mentions, from an anecdotal standpoint, it's there. So the way I would see it is surveys are conducted on a regular basis where questions are being asked to multinationals. Are you looking to relocate your supply chain out of China? And the answer tends to be yes. And then when they ask you, okay, perfect, if you are going to relocate, where are you going to relocate to? And one of the top countries that comes in the answers is Mexico. So yes, it's there on an anecdotal survey based. Now, if you wanted to measure it from whether we're seeing it economically, you could measure it manufacturing as percentage of GDP. So in the case of Mexico, manufacturing as percentage of GDP has increased somewhat. Obviously, it could be a result of something completely different, that we are coming from a very important improvement in manufacturing in the last couple of years, but it could be reflected there. Now, companies did want to relocate out of China because of the uncertainty of zero COVID. But now that we don't have uncertainty anymore, we might not see that fast relocation as we would have expected last year. And then just going back to what Michael mentioned, and you want to be careful because the US wants to create jobs here. I mentioned semiconductors as an important potentially supply chain. The CHIPS Act in the United States, assuming it's implemented successfully, in 1990, the United States used to produce 34% of the world's semiconductors. We now produce 19%. So if they succeed, we are going to bring onshore that supply chain, and that'll be very important. Your question on, I mentioned China, I mentioned the US, why didn't I mention anything on Latin America? So Latin America absorbs external conditions. They never dictate external conditions because they're not that relevant for global growth. And so that's why I didn't mention it as an important driver of external conditions. And so for this year and in the future, if they don't get their economic policy straight, they're going to continue to absorb conditions. And I don't have anything to comment on trends in the Caribbean.
So just to wrap up, I mean, on nearshoring, people have spoken about nearshoring, friendshoring, and ally shoring. I would say nearshoring is basically, I mean, with COVID, we realize that we have these pandemic shocks, and that significantly alters transport costs, production processes around the world, and therefore you want to be closer to your centers of consumption because you minimize uncertainty associated to coordinating many different places producing one good. I would say friendshoring means that, and then you can add climate change and extreme weather events that are other shocks to that global value chain. Then I would say friendshoring would be, you want to be in countries where you can coordinate policies when these shocks happen. So if you're in countries in which they don't talk to your center of consumption when they decide to close down your plants, then you know that maybe a very small part of your production process might significantly alter your capacity to be able to deliver consumption goods. While if you're in countries in which the authorities in both countries will sit together and will say, how do we coordinate the response to this weather event or this health event like COVID, you're in much better shape to avoid significant disruptions in what you're doing. And then allied shoring is basically the CHIPS Act. You don't want to be producing things in country that could actually be use those production processes against you in a context of geopolitical tensions, be it commodities or being chips, et cetera, et cetera. Whether it is happening, I think Shantall and Michael commented on things. When you go to Mexico, people in the north of Mexico tells you that it is happening in terms of manufacturing space. I mean, people are renting space. I mean, when you look at REITs that are these real estate investment trusts that are oriented to the manufacturing sector, capacity utilization is very high, et cetera. However, you look at those, at all of that anecdotal evidence, it might be happening. Countries that will benefit are the ones that people mentioned here. However, we haven't seen none of the free trade agreements signed with the US be a game changer in Latin America. So NAFTA in 94, the Colombian free trade agreement with the US, the Chilean free trade agreement, they were very good. They significantly affected in a positive way some regions of this country, but these are not European Union integration processes. So I would say that there are more basis points effect than percentage points effect. I mean, and maybe 300 basis points, but once you reach those, then you go back to your potential GDP growth. And that, therefore, these processes will not engineer a convergence of living conditions in Latin America towards advanced economies. And I would just, a word on institutional issues. I think Monica and Michael talk a lot about the institutional challenges in Latin America. You have a significant part of the population viewing institutions as something that have actually been forced by the elites to implement an economic, a social model that actually has not worked in their favor. And therefore, when we talk about protecting institutions, what they hear is basically you want to protect the status quo. So the question is, how do we go about redefining institutions in which we keep what is worth keeping and we reform these institutions in a way, the judicial system that actually serves the whole population. And if you look at the number of people that are jailed in Mexico without due process and stay there for 10 years, then those people say, well, the rule of law is not working for me. So in that sense, and maybe what's going on in Chile of having one round of a constitutional assembly, another round, and eventually to reach a situation in which you really find some of these institutions to find a better socio-economic equilibrium, I think is the way to go, much better than trying to redesign your institutional setup in the streets. I think we definitely know that that's not the way that we will end up with the right institutional process, but socially, I mean, maybe it is hard to get to what the Chileans are doing, or I mean, looking at the Uruguayans here already have. But there's relatively small countries in Latin America, and I think the challenges with tough external conditions and these huge socio-economic tensions that I think Monica described, especially in the case of Brazil right now, it's a very uphill challenge for Latin America in the next decade. So with that, I mean, I thank you for coming. We will try to continue to do this at the beginning of each semester to be able to discuss with you how, I mean, we at the Georgetown community and also with some invited guests from outside are basically looking at what's ahead of us in Latin America for the next 6 months. Thanks.